Hello, everybody. Welcome to our presentation on SSI and self-employment. My name is Lucy Axton Miller, and I'm one of VCU's team members on the National Training and Data Center. And basically what my team does is train people all around the country about the impact of paid employment, or in this case, self-employment, on Social Security disability benefits. So before we actually get into the slides, let's put everything in context a bit. One of the biggest barriers to employment or self-employment in the world of disability is fear of how that income will affect really critical cash benefits like SSI. And SSI stands for Supplemental Security Income. And it's one of the really important benefit programs available to adults and children with disabilities through the Social Security Administration. The other program, SSDI, Social Security Disability Insurance, is very different. And we're not going to be touching on those benefits during the presentation today at all. Today's presentation will focus exclusively on the SSI program and how achieving a self-employment goal will impact those benefits and the Medicaid coverage that comes with those benefits. So that's just a little bit of background before we get into the objectives. So let's take a look at what we hope to accomplish today. The first area is that we want to describe how Social Security determines earned income for SSI recipients who are self-employed. And self-employment in the SSI program is treated very differently from wage employment, and we'll be covering those differences. Second, we hope that you'll come away with an understanding of how self-employment income affects SSI cash benefits and the Medicaid coverage that comes in most states automatically with eligibility for SSI cash benefits. Third, we hope that after this time together, you're able to identify some of the important work incentives that apply to people who are self-employed and who receive SSI. And we're not going to have enough time today to cover some of the more complicated work incentives, but I certainly will provide you with some research so that if you have a mind to, you can do some more research into that area. So we'll have some resources, I'm sorry. And then finally, we hope that you're able to describe how SSI recipients should report self-employment income to Social Security. And it sounds like such a simple thing, but it's an area where beneficiaries really get themselves in trouble. They don't know when to contact Social Security to let someone know that they have started a small business. They don't know how to report the income that's generated from self-employment. So hopefully we'll shed some light on that today. So let's get started. Why is self-employment even an issue? Why are we even talking about that today? Well, over the last 10 or 15 years, self-employment is increasingly being seen as a viable employment outcome for people with disabilities, even the most severe disabilities. As a matter of fact, rather than saying even the most, particularly the most severe disabilities. And that's because self-employment tends to be very accommodating of a disability. So rather than you having to apply to whatever rules an employer might have, when you're self-employed, you can work from home, you can often flex your hours, you can set up your workspace to accommodate whatever disability you have. If you're having a bad day, maybe you don't do as much work that day. But self-employment can be incredibly flexible and very accommodating. And so depending on a person's disability, it might be a much better option than trying to get on with an existing employer. It's also highly empowering. What could possibly be more empowering than starting your own company, operating a small business, doing something that you have a passion for or a real talent for? And that really gets us into the third bullet here. It can be very personally rewarding. And it can be quite lucrative if you're successful in launching that small business and getting everything going and generating that self-employment income. So self-employment, as you can see, is definitely an area of growth and an area that can be highly accommodating for people with disabilities. So when we talk about the SSI program and how SSI benefits are affected by self-employment, we need to kind of take a couple of steps back and just do a brief review about how any type of earned income affects the SSI benefits. Now, just even another reminder, the SSI program is very strictly means tested. So not only are these benefits affected by earned income, whether that's wages or self-employment income, they're also affected by unearned income, which is any kind of income a person might receive that's not remuneration for work performed, and also resources or assets, right? So this program is highly affected by income and resources. Now, the presentation today is going to focus exclusively on self-employment income, which is a type of earned income. But it is important to remember that other types of income and resources or assets can affect someone's eligibility for SSI. Now, just as a brief review of how the SSI program looks at earned income, the amount that an individual receives in their SSI cash payment today reflects their earning status, and SSI cash payments can go up and down every month based on how much countable income an individual has. So that's one of the interesting things about the SSI program, is that benefits fluctuate and can fluctuate widely depending on how much countable income is at play. Now, Social Security, the good news is Social Security does not reduce a person's SSI cash payment by $1 for every dollar earned. There are lots of deductions, and we'll get into some of that today so that you can see how that works. But something important to remember is that the SSI program treats earned income quite favorably. It loves work. It's not so kind to unearned income, but the SSI program has lots and lots of deductions for earned income and treats earned income quite favorably. One of the things to remember, and when you're talking to SSI recipients, is that when an SSI recipient works, that individual always ends up with more money in their pocket at the end of the day, even when the SSI benefits are reduced. So because it's not dollar for dollar, and we'll show you those calculations in a minute, everyone who works, who gets SSI, comes out ahead financially by doing so. The other thing to remember is that because of certain work incentives, even if that SSI cash payment is reduced, even if it's reduced to zero, the related Medicaid coverage that comes with SSI in most states can be retained through a work incentive called 1619B. We'll cover it. And it's important to know that that is a very important protection. Almost every SSI recipient qualifies for that. We'll show you what those eligibility rules are. And that protection can continue indefinitely. So the ongoing receipt of Medicaid, which is so important to so many SSI recipients, there are work incentives that protect that. So that's really important to know. So here are the steps that Social Security takes when someone earns money. And these steps are the same whether that's wage employment or self-employment. And I know this is math, and some of us might be a little bit math challenged, but it's not hard math, I promise. The steps are in order here, 1, 2, 3, 4, 5, and they're very simple. First, Social Security starts with a person's gross monthly earnings. And if you're familiar with that term, gross means that dollar amount before deductions like taxes are taken out. So they start with your gross monthly earnings and they subtract a $20 general income exclusion. I know that doesn't seem very generous, And that exclusion has been the same since the SSI program was established in 1974. But it is a $20 deduction, and as long as the person doesn't have any unearned income in the mix, that $20 is taken off of the earned income. So you take that $20 off the top. Next, step 2, there is an additional $65 earned income exclusion that's taken off of any earned income. You'll often hear the $20 and the $65 combined, and you'll hear people describe this as, well, the first $85 that you earn doesn't count. That's where that $85 number comes from. So take $20 off, take $65 off. Next, you have this remaining amount, and Social Security divides it in half. And that's often called the 1-for-2 offset. And what you're left with is called countable earned income. So you can see right off the top, $20, then $65, you take what's left, you divide it in half. So less than half of a person's earned income would count when Social Security is looking to reduce that SSI cash payment. And the final step here, step 5, you take the total countable income and you subtract that off of that individual's base SSI rate. And there are some different rates that come into play there. We're recording this or doing this training in 2018, and the maximum SSI rate for federal dollars is $750 a month this year. Now, not everyone has that as their base rate, but lots of people do. So that would be the dollar figure that Social Security would start with and then subtract the countable earned income off of that. And so the remaining amount is that individual's adjusted SSI cash payment. So you can see that these are fairly simple calculations that Social Security performs. And the takeaway from this is that people always come out ahead by working. And you can see here on this next slide, this is something I wish everyone who watches this training would sort of commit to memory, because this simple sentence is so powerful. The first $85 that you earn each month doesn't count at all, right? That's taken right off the top. For anything that you earn over that first $85, Social Security will take $1 from your SSI check for every $2 that you earn. And if you can go back and look at those steps, what that means, SSI recipients always come out ahead by working. And if you know very much about the SSI program, you know that it's pretty complex. So lots of intricate rules about how your check may be reduced based on this type of income, or all the list of resources, then how much you can have in resources that can make a person eligible or ineligible. And there are few things that you can use that word always and have it be true. But this is one of them. And this is a really critical point to make. SSI recipients who work, whether that's in wage employment or self-employment, always come out ahead financially. And that's the big takeaway from all the math that we just showed you. So let's talk a little bit about the difference in how Social Security looks at income from self-employment as compared to income from wage employment. Now, wage employment is a month-by-month thing. They're going to look at countable earned income. They start with a person's gross wages that comes out on that pay stub before taxes are deducted. And it's month by month. And it really is very specifically, when did you receive that money? It's that particular. So if you're paid every week or every other week, there are going to be a couple of months in the year that you receive that extra paycheck. And that literally is counted in that month that it's received, and can cause an SSI cash payment to go down more for those months when there's maybe an extra paycheck. So the concepts for earned income from wage employment, you start with gross, it's month by month, it's countable income received in each month. So let's compare that to how Social Security looks at income from self-employment. Well, one of the things about self-employment that Social Security is well aware of is that income can vary drastically month to month. And if you've ever been self-employed or know someone who has been, that makes sense. When you first start your business, maybe you lose money. You actually have negative cash flow for a couple of months, or maybe even in the middle of a year after you've started a business, you might have highly profitable months and then months that are not so profitable. For people who are self-employed, Social Security recognizes that that kind of variance would be really hard to deal with if you are actually looking at that earned income from self-employment month by month by month. So they don't do it that way. They take your profit for the year, right? So they wait until you have actually filed your taxes, and here April is tax season, so that's probably close to all of our hearts are right around now. They look at that profit and they literally divide it by the number of months in the calendar year to spread it out and to compensate for the incredible variances in income that can come from self-employment. Now, another difference, a really critical difference, is that Social Security looks at this figure that they call net earnings from self-employment. And that's different from gross wages that you would have when you are employed in a company working for someone else. Net earnings from self-employment, it's also called Nesi. So you have all of these acronyms for everything in Social Security land, and this is a common one in self-employment. Net earnings from self-employment is Nesi, and that has a particular calculation that's used. So the difference here, net earnings from self-employment, not gross wages, and they're not looking at it month by month by month. They're looking at that profit for the year and then dividing it over an entire calendar year. So let's take a look at that. Now, Nesi is a concept that a lot of beneficiaries misunderstand. Basically, it is the profit that you would report to the IRS by a business for a year, less a portion of what's called self-employment taxes. Now, there are a couple of concepts in just that first sentence that people get a little muddled about. So let's take a look. Profit is not the same as gross sales. So if I run a business and I'm selling a bunch of stuff that I manufacture, that I make, gross sales is how much I actually receive when I sell a product. But when there is expense that you incur as a small business owner to make something that you sell, that is subtracted when you determine how much your actual profit is, right? So it's really important that beneficiaries understand we are not talking about reporting gross sales to Social Security, because that would be a very inaccurate number and is too high, right? We're looking at profit. Profit is gross sales less any allowable business expenses, right? Any legitimate business expenses. But that isn't all. The next step that Social Security takes is they literally reduce that profit by another factor. And this is something, if you've never been self-employed and you don't know a lot of people who have been, you might be unaware of. When you are self-employed, you have to pay something called self-employment tax. When you are in wage employment, that employment tax comes out of your paycheck. You know that FICA contribution that reduces your paycheck. That is about 7%. It's 7 plus some figures in there. And then your employer pays an additional amount over and above what comes out of your paycheck. Now, when you are self-employed, you have to pay both the wage employee's contribution and the employer's contribution, because you don't have an employer, you're your own employer. And what Social Security is doing when they're determining Nesi, they're going to take the profit, they multiply it by this odd little figure of 0.9235, and that further reduces the Nesi, the net earnings from self-employment, so that a self-employed person isn't penalized for the other half of that self-employment tax that if you were in wage employment wouldn't come through your paycheck at all. It's an additional amount that the employer pays on your behalf. So when you're self-employed, you have to pay both of the halves of that self-employment tax, and Social Security allows you to deduct part of that when they're looking at how much of that net earnings from self-employment to count. See, that makes sense, right? Now, what the result is, it's an annual Nesi figure. And again, it's derived from your tax returns. At the end of that tax year, you complete all those forms, you send them to the IRS, you send your tax returns to Social Security. They take the figure that you report to the IRS and convert that to net earnings for self-employed people, and that's what is counted when they're determining how much of your SSI cash payment needs to be reduced. So how do you calculate it? Well, they use that annual Nesi to then convert to a month-by-month figure, because remember, in the SSI program, your eligibility for SSI is actually determined month by month, and the amount of your check is determined month by month. So they have to take that annual figure and they have to convert it to a monthly dollar amount. Well, the way that Social Security does this is very simple. They take that annual figure, they divide it equally by 12, because that is how many months there are in a tax year, a calendar year. And Social Security always divides it by 12, even if you did not operate your business the entire year. And I know that sounds sort of odd, but that's the way that they do it. So let's say you opened your business in May, you didn't work for a full 12 months, but Social Security is going to take that annual Nesi, they're still going to divide that by 12, even if your work is seasonal, even if you only work part of the year, even if you closed down your program, let's say in October or November, it doesn't matter. Social Security always divides by 12. So that monthly Nesi is then the starting point, and that's that number that's plugged into the calculations to determine how much that SSI cash payment should have been. Now, here's another wrinkle. When you are in wage employment, you go to work, you're reporting your wages to Social Security, and they are adjusting your check as you move forward, right? So as you move forward, your check is being adjusted based on how much countable income you have month by month by month. But in self-employment, it always has to be in arrears, because you have to wait a full tax year to know how much profit there was. So when Social Security takes that annual profit, that's for a past year, they divide it by 12, and they adjust your SSI cash payment retroactively. So if you actually have a profitable business, we hope that our beneficiaries do, it will mean, and it's kind of unavoidable, that you're probably going to be overpaid a little bit, and you'll have some settling up to do. It's almost impossible to avoid that for self-employed people, so it's really an important counseling point that we explain to beneficiaries who run profitable small businesses that when that Nesi is determined at the end of the year, certainly that first year of operations, if there's a profit, that check will be reduced retroactively. So if you got $750, $750, $750, $750 that whole year, and Social Security comes back and said, oh gosh, you should have only received $700, then the balance that you received that you shouldn't have will be recoverable. That means that Social Security will need that money to be paid back. It's not the end of the world, and it's nothing to get upset about. It's simply an avoidable result of self-employment. Now, how does Social Security deal with that if a beneficiary is overpaid? Basically, they will adjust forthcoming checks, future checks, by a certain amount every month to recover, that's what they call it, that overpayment. Certainly they will write to the beneficiary and ask if the person wants to pay it back in full. Most SSI recipients don't have funds available to do that. So as long as there is an SSI cash payment, even a reduced one, still available, Social Security can reduce that further to compensate for that overpayment, recover that overpayment. It's an unavoidable aspect of self-employment. So let's look at an example. This is Ellen. And Ellen starts her own business. She calls it Web Design on a Dime. And she opens this company in June of 2017, so last year. And she just filed her 2017 taxes. April is our tax month. And her net profit for the year was $8,000. Now, what does that mean? That doesn't mean those were her gross sales. Maybe she actually brought in $12,000 a year or $15,000 a year. That $8,000 is her profit. So that is after all of those allowable business expenses have been deducted, right? So that's the amount that's on her tax return. Now, up to this point, Ellen has been receiving the full federal benefit rate in SSI. And that federal benefit rate, also known as the FBR, in 2018 is $750. So that's the maximum federal amount of SSI that an individual can receive. She wants to know what will happen to her SSI check now that her business is generating a profit. So let's take a look at the steps that we outlined for you earlier and show you how these steps would apply to Ellen. All right, so here's a little bit of math. Okay, don't get freaked out about this. I know some of us in human services, we're not great at math, but this is easy math. So step one, we identify that annual Nesi. And Ellen's Nesi, $8,000 of annual net profit. And remember that weird little number that Social Security multiplies that profit by, 0.9235. And remember, that is to compensate for the fact that self-employed people pay both pieces of that FICA, the employed person's half and the employer half. So it reduces how much counts in order to be fair, right? So that figure there is $7,388 of annual Nesi. Step two, they have to take that figure and divide it by 12 so that it's a monthly amount. And remember, even though Ellen started her business in the middle of the year, right, not the full year, they're going to still divide that figure by 12. So you can see that math here. $7,388 divided by 12 is $616. That's the amount of monthly Nesi. All right, carrying that further, here is how this plays out in the calculations. And we've gone over these deductions before. You have the $20 general income exclusion, and because Ellen doesn't have any unearned income, that $20 is taken off of her earned income. So that leaves her with $20 less there. They move on to the $65 earned income exclusion. Anyone who has any kind of earned income is permitted to take that additional $65, so that's $85 off the top. That leaves $531. Then they're going to divide that figure in half. Remember, you get that 142 disregard. You divide it in half so that less than half of the monthly self-employment income is going to count for Ellen. So the countable Nesi is $265.50. She actually earned for the month $616, but Social Security is not going to count all of that. It's less than half, and that's really good news. So step four, we calculate that SSI cash payment. So remember, they retroactively go back and deduct $265.50 each month so that the total amount for the year is right for Ellen. So she is going to have an overpayment. She'll have to recover that. Social Security will have to recover that from her future SSI cash payments. Now, her business generated $616 of Nesi on average, but Social Security is only going to count $265.50 of that income. The adjusted SSI cash payment is applied for all 12 of those months in 2017. Now, it means that she's been slightly overpaid, and she's going to need to pay back that amount. And again, Social Security will deduct that from future SSI cash payments. Now, remember, SSI recipients are like, oh no, my check is being reduced, oh no, I owe money. But it's really important for SSI recipients to look at the total financial outcome. Even though Ellen is now having to pay back a little bit of SSI, for that full year, she generated a profit from her business. She ended up with more money in her pocket than she otherwise would have had if she had chosen not to open her business at all. And that total financial outcome is such an important point to stress with SSI recipients. They can tend to get a little hung up on the fact that, uh-oh, I have to pay back some of my SSI. You have to look at the big picture. Yeah, it's not fun to owe Social Security back some money, but look at how much more you had in your financial outcome for that year than you otherwise would have had. So let's talk a little bit about some of the work incentives that can apply, because what we've explained up till now are the very basic calculations that once you report self-employment income, Social Security enters that data into their system and it sort of automatically calculates. But there are several special work incentives that aren't automatic, that an individual has to qualify for. Like there have to be certain circumstances to make you eligible for those. They also involve more record keeping. You have to submit sort of a request to Social Security to have these special work incentives approved. And what these work incentives do is further reduce the amount of SSI, earned income that counts when Social Security is determining how much to adjust your SSI cash payment for. Now, because of the length of this presentation, we don't have time to cover each of these in detail, but I have provided a link here on this slide for a wonderful resource that if you've never seen it, as soon as this presentation is over, hop on the web, go and find this, download it. This is our Bible. This is the Red Book on Work Incentives. It's produced by Social Security every year. It's available for free to download on their website, and it provides a really nice explanation of all the different work incentives for all of the disability programs, not just SSI, but also the SSDI program. And I'm going to refer you there. I'll give a very brief overview of the work incentives listed here, but for further information, I would suggest that you start with that Red Book. And like I said, if you've never read it, it's a critical piece of information that anyone who is helping people with disabilities get jobs or start small businesses should have at their fingertips. So let's start with the first one, impairment-related work expenses. The acronym IRWE, okay, IRWEs. This is exactly what the title of it says. Social Security recognizes that sometimes a person with a disability might incur expenses in order to work that a non-disabled person would not incur. These expenses are due directly to the disability and are incurred because the person is working. And there's innumerable things that can count as IRWEs. It could be paying for a reader to help you with the reading if you're blind or have a visual impairment. It can be transportation services. There are many, many different kinds of expenses that can qualify as an IRWE. And what you have to do is document to Social Security that you are incurring these expenses. It has to meet certain criteria. You request approval to have these expenses deducted when Social Security is determining your income. And if these expenses are approved, it further reduces how much of your earnings are counted, and that allows you to keep more of your SSI cash payment, right? So it's really pretty logical. IRWIs are applied in self-employment and wage employment. As a matter of fact, there's an added advantage to IRWIs when someone is self-employed. A lot of IRWIs also count as legitimate business expenses. When that is the case, rather than claiming them as IRWIs, you simply deduct them when you are determining your profit. And the good news is that even reduces your income for tax purposes as well as for the purposes of Nesi, when Social Security is deciding how much of that self-employment income to count. So there's a decided advantage there. Most self-employed people don't actually claim IRWIs. They take those expenses and run those expenses through their books for their business. Now, not everything that would count as an IRWI would also count as a legitimate business expense. A perfect example is medical expenses. Unreimbursed medical expenses many times are IRWIs, but almost never would a medical expense be permitted by the IRS as a business expense. So when that's the case, you can still submit the receipts to Social Security, make your case that the expense meets the criterion for an IRWI, wait for that approval, then they will deduct those from your Nesi at the bottom end there when they're deciding how much of that monthly Nesi to approve. There's also something called blind work expenses. Now, if any of you have spent any time learning about how work affects disability benefits in Social Security world, one of the things you see is that if you qualify for benefits based on statutory blindness, there are a whole series of different and special rules that apply to those folks. So now the definition of statutory blindness is very specific. Not everyone who would describe themselves as being blind will qualify as being statutorily blind and be receiving benefits based on blindness, but some people are. And for those individuals, they get a special deduction called BWEs, or blind work expenses. And this is incredibly easy. Blind work expenses are any expense that a beneficiary incurs by working. It does not have to be related to the disability. So you can see it's more inclusive than IRWIs. IRWIs are impairment-related work expenses. BWEs are simply work expenses. So any expense that someone who is statutorily blind incurs by working can be deducted. So it's a very powerful work incentive for individuals who receive benefits based on blindness. Just something to remember. Now, one of my favorite work incentives is listed third here. It's known as the Student Earned Income Exclusion. And it's a wonderful way to reduce countable earned income for individuals who are young. You have to be under age 22, and you have to be a student per Social Security's definition. And that can get a little complicated, but you have to be going to school per their definition, and that can be high school, that can be college, that can even be online kinds of training, it can be vocational training. Anything along those lines. But if you are working and going to school and you're under the age of 22, you can deduct a big portion of your earned income. This is such a powerful work incentive that many people who claim it have no reduction in their SSI cash payment because of earnings at all. And this applies to self-employment just as it does to wage employment. So always be watching for those young people that you're serving who are still in school, because they have an additional work incentive that other SSI recipients don't have, and it's incredibly powerful. And then last, but certainly not least, is plan to achieve self-support, or PASS. Now, I always refer to this as the mother of all work incentives because it's complicated. This is basically where you write a detailed plan to achieve a specific occupational goal. And in that plan, you set aside income or resources that would otherwise cause a reduction in the SSI cash payment or ineligibility for SSI. You set aside that money in a special bank account, and Social Security ignores it, and you use that money to purchase items or services that you need to achieve a long-term occupational goal, with the idea being that if Social Security sort of invests in you now, that you will work at a level that will either preclude cash payments later or will cause the cash payments to be significantly reduced. Now, a plan to achieve self-support is a powerful work incentive, but it's not for the faint of heart. It's a lot of work. It involves completing a complex form, but it can be really useful in self-employment because lots of times starting a small business incurs expense. Like, it costs money for someone to start a business, and PASS can be a really good way to set aside the funds that you need to get that business capitalized. So here on this slide talks about that a little bit. We literally at the NTDC, we do hours and hours of training on PASS. Like I said, this is a complex work incentive, and we offer internet-based courses that are many hours long that talk about self-employment and how to use PASS to capitalize a business. So suffice it to say, you're not getting enough information to be able to do that by yourself from participating in this training. But the important thing is that you remember there is this work incentive called PASS for people who are looking at self-employment. It is definitely worth having an expert, a community work incentives coordinator, like a benefits specialist, talk to that person to see if PASS might apply, because it is a very good way to capitalize a business. You can use income or resources to fund a PASS, and Social Security, as I said, disregards that income that you set aside in the past, allowing that SSI cash payment to be higher, right? So it's kind of you leveraging your own benefits to fund the capitalization of your business. It's an invaluable source of ongoing funds to support the day-to-day operating expenses during business startup. And that sounds kind of simple. It's really rather complicated. And again, you're not going to know how to get a PASS written from watching this short training, but hopefully you'll come away from this being at least aware that there is this powerful work incentive that might be leveraged for a particular beneficiary you're working with. Now, one of the most complicated aspects of using a PASS to fund a business is for Social Security to approve that plan. It must be accompanied by a detailed business plan. See, I said this was not for the faint of heart. It involves a lot of work. So Social Security even establishes an outline for that business plan. That plan must cover certain things, and I've provided a link here to what those requirements are, so that you, if you want to, you could click on that and take a look at what those requirements are. Again, if you're not skilled in this, if you're not trained, I wouldn't recommend trying to help a beneficiary with the PASS. That is a referral to a community work incentives coordinator or benefits specialist, someone who is trained and certified to do high-level benefits counseling, right? Just something to know. So let's talk a little bit about a really cool aspect of self-employment, and one of the reasons why self-employment can be so powerful in the SSI program. Remember that SSI is a very strictly means-tested benefit, right? So not only does income affect eligibility and the payment amount, but you have to have countable resources below a very set limit. And that limit for an individual, meaning a non-married person, is $2,000. And that limit is assessed every single month, okay? So a single month in which you had $2,500 in the bank and all of that was countable could cause ineligibility for SSI and the SSI-related Medicaid for that month, okay? So that's a really important point. However, for people who are self-employed, there is an incredibly powerful exemption, and it's called Property Essential for Self-Support. The acronym is Pest. I know that's confusing because we just talked about PASS. This is Pest with an E in the middle. And basically, in a nutshell, what PES is the exclusion allows people to have resources that can be things, that can be equipment, it can even be cash in a business account. Items that you use to conduct trade or business are disregarded when Social Security is doing that resource determination month by month by month. So for small business owners, PES allows the building of some wealth, where in the SSI program, that's pretty tough to do. There are exemptions like home ownership that allow SSI recipients to build wealth, but there aren't many of those. This PES is tremendously valuable and allows small business owners who are SSI recipients to build assets and resources in a business, held by a business, to conduct trade or business and not have those count against the SSI individual's eligibility for the ongoing SSI and SSI related. Now, the cool thing about PES is there's no upper limit. It's not like, oh, that's fine, but don't go past $10,000. No. It doesn't matter what the limit is. It's not a time-limited exclusion. As long as the business is operational and the property, whatever that is, equipment, the cash, the things, are in current use, meaning that the business is still running, you're doing the work for your business, and you need those items or the cash in order to operate your business, then those things will qualify as PES. They will be disregarded by Social Security. They're owned by the business, right? And so it allows the building of some measure of wealth. And that's something that's really important to discuss with beneficiaries, because this is an incredible advantage that self-employment provides that wage employment does not offer. So let's take a look at Medicaid eligibility and SSI. Many years ago, in 1988, the Social Security Act was amended to make it easier for SSI recipients to work and not to lose their Medicaid coverage. Because as you may well imagine, that $750 check, okay, that's important, but that isn't as critical as health insurance. And for people, particularly self-employed people, who don't have the option of enrolling in an employer-sponsored plan, retaining Medicaid eligibility when you go to work is really important. The provision in the Social Security Act that allowed people to keep their Medicaid when they work is called 1619B, and that's because that's the number or the section of the Social Security Act that basically explains this provision that was established in 1988, and it allows people to disregard a substantial amount of their earned income when that Medicaid determination is being made. And 1619B doesn't even kick in until the person would have enough Nesi, net earnings from self-employment, to actually cause the SSI cash payment to go to zero. As long as the beneficiary receives a penny of SSI, Regular Medicaid continues in most states. There are a few exceptions, but in most states. But even after Nesi is so high, your business is so profitable that you're not receiving an SSI cash payment anymore, 1619B allows eligible individuals to retain that critical Medicaid coverage. Now, to qualify for 1619B, you have to meet certain criterion, but the overwhelming majority of SSI recipients do meet the criterion. So it's not something that only a few people get to benefit from. It's a powerful work incentive. And another really awesome thing about 1619B, it's not time limited. So it can go on forever as long as you meet those criterion. So let's take a look at what those are. First of all, you have to have gotten SSI, a cash payment, in the previous month before the wages caused your SSI to go away. So this isn't, a tricky way for people to establish eligibility for SSI-related Medicaid who never got SSI, right? This is an SSI work incentive. So you still also, the second criteria, you have to still be disabled. And that means that you continue to meet the medical criteria to qualify for disability benefits, that medical recovery is not an issue for you. And for most SSI recipients, that's not a problem. Third, you have to pass something that Social Security refers to sometimes as the Medicaid needs test, also referred to as the Medicaid use test. Basically, what Social Security is looking at, they want to continue Medicaid for individuals who need it and who have used it. It's not a hard test to pass at all. Social Security, when your wages go over the break-even point and your SSI check goes to zero, they actually share files with the Medicaid agency. They're going to go in and look. Have you used your Medicaid in the last 12 months? And that's an indicator that you need it. Even if you haven't used it, they will ask you a series of questions. They'll get you on the phone and ask a series of questions to see if you need it. And they basically ask you, would you need to use your Medicaid if you became ill or injured in the coming 12 months? And Medicaid beneficiaries typically would answer that yes. Or they'll say, do you need your Medicaid in order to continue operating your small business? So it's just, they're checking to see, does this person rely on the Medicaid, or is there another option for this person? And remember, in self-employment, 1619B really is important because you don't have that employer plan to rely upon. Now, fourth, this is a critical bullet here. You have to have gross annual earned income. That would be Nesi, right? Nesi, the net earnings from self-employment, below this magic number called the threshold amount. Now, those figures are updated every year. They go up typically every year, and there are different amounts for every state. So I can't tell you what your threshold amount is. Every state has a different amount, and they change. Now, a good way to find it, you can literally Google SSI threshold amount, and you probably would find the chart that Social Security has with those amounts. Another good way would be to refer an individual for benefits counseling, either through a work incentives planning and assistance or WIPA project, or another project perhaps that your state may have multiple ways to get benefits counseling. These threshold amounts are practically, tattooed on our arms. For those of us who do this for our job, we know what those amounts are and are happy to share those with beneficiaries. So you have to have that annualized earned income under a magic number, but these numbers are high. Now, in my home state of Kentucky, that annual amount is nearly $30,000 a year. So, we're not talking about little bitty amounts of income. We're talking about good annualized amounts of income that you would have to earn more than that before your eligibility for the SSI-related Medicaid would be in jeopardy. And then finally, you have to continue to meet all of the other SSI criteria. Now, this bullet trips people up because if you're working at a level that precludes your SSI cash payment, a lot of beneficiaries think, oh, I'm done. If I get letters from Social Security, I don't need to respond to them. I can save as much as I want to, and it doesn't matter. But if retaining eligibility for the SSI-related Medicaid is something a beneficiary wants to do and needs to do, then it's critically important that the unearned income remain below the allowable limits, and those countable resources, right, have to be below that $2,000 figure. Those numbers don't go away just because you're self-employed. They don't go away just because you're no longer getting an SSI cash payment. Those income and resource limits continue forever as long as you retain that 1619B Medicaid eligibility. And if you want to retain that eligibility, those criterion must be met. Again, if this sounds a little complicated or confusing, remember there's help. There is free benefits counseling available to individuals who are pursuing wage employment or self-employment. And anybody planning for self-employment should be referred for help because it does get complicated. And these are counseling points that a certified CWIC with a WIPA project or any qualified benefits specialist or benefits planner can help with. Now, let's talk a little bit about common misconceptions that SSI recipients tend to have about self-employment. And I've been working with SSI recipients who are planning for self-employment outcomes for many, many years. And these kinds of misconceptions are extremely common. And not only are they common among beneficiaries, unfortunately, they're common among service providers and professionals who are working with people with disabilities. And these misconceptions can cause beneficiaries to make terrible mistakes that can affect benefits. So, number one, SSA only counts the income I take out of my business account. No, that is absolutely not true. What you're talking about here is something referred to as owner's draw. So beneficiaries think, I can have this incredibly profitable small business, I'm generating all of this income, I can put it in my business account, and Social Security only will count whatever I take out of the account. Wrong. Social Security counts what you report on your tax returns, and that is your total profit, right? So it doesn't matter that you only took $1.95 every month out of that business account. If for the year your business generated a profit, that profit will be, remember, turned into Nesi, right? Multiplied by that 0.9235 figure and then divided by 12, and retroactively they will adjust your SSI cash payment so that you may be overpaid if you didn't have your SSI already reduced. So please help me spread the word. It isn't about I put the money in my bank account, my business account, and I never took it out, so it doesn't count. It's all about the profit. Here's another one I hear from time to time. Self-employment income is free money. I don't need to report it. That isn't true. You do need to report it 2 times. One to the IRS, right? Because you don't have the advantage here of your employer taking care of a lot of stuff. You have to take care of that yourself when you're self-employed. You have to pay your self-employment taxes. You have to pay taxes on the profits of your business based on how your business is structured. So yeah, you have to report it A, to the IRS, and B, to Social Security. So this notion that if I'm self-employed, it somehow doesn't count is very widespread. And unfortunately, people end up getting themselves in terrible trouble with the IRS and with Social Security when they don't tell anyone that they're working and they don't report the income from their business. So spread the word. Just because you start a small business doesn't mean, you can just have everything and you don't have to tell anyone. You do. So, and that third bullet, if I'm self-employed, I don't have to pay taxes. Yes, you do. You don't have anyone paying them on your behalf. You don't have the advantage of that paycheck where your half of the FICA is deducted and that employer writing that check to the IRS every year, or to the authorities that's paying the other half of the self-employment taxes. When you are self-employed, you have to do that yourself. And that needs to be paid quarterly if there's a profit. And if you don't pay it quarterly, you could be subject to penalties and fines. Believe me, I'm married to a CPA who does small business taxes, and some of the things that happen to people because they don't understand the legal obligations that come with owning a small business and being self-employed. But they're for real, and people need to take it seriously. And then finally, anybody can start a business. It's easy. It is not easy. It's a lot of work. If it were easy, everyone would be self-employed, right? Now, that's not to say it isn't awesome or that some people aren't tremendously successful. Lots of people are. But it isn't for everyone. There are lots of things to consider. Keeping your books, paying your taxes, capitalizing your business, setting up your bank accounts, doing all of that work yourself, determining a service or a product that you then have to produce and you have to sell it. There's lots of work involved in being self-employed, lots of work. And some people with disabilities, they're not well suited to that. Some people without disabilities aren't well suited to it. I have never had a desire to be self-employed. I'm too lazy. I'd rather be wage employed and make it easy. But for those folks for whom it makes sense, it's a wonderful alternative. But you have to go into it with intelligence and preparation and know it's a lot of work getting a business up and operational and then maintaining that business over time. So if you are profitable, how do you report your income? Well, Social Security requires that you notify them in advance when you become employed or self-employed. So when you start a business, it's worth a visit to the local field office or a letter to the local field office. Now, if you are projecting profits in your first year and you feel very confident in your projections, then you can report those. And Social Security may use those profit projections to adjust your SSI cash payment prospectively. That means in advance. But you got to watch out for that, because what if your business isn't as profitable as you thought it would be? Then your SSI check is going to be reduced and you're going to struggle to pay your living expenses. So this is always tricky, is figuring out how this first year is going to go. And a lot of SSI recipients find it better to not project a profit and to have that cash payment prospectively reduced. It's better to say you're not sure and then watch your books on a month-by-month basis. See, this is work. You need to be tracking the income that's coming in, the expenses you're incurring, and looking at that profit month by month. And when your business starts to be profitable, you need to contact Social Security again and provide your profit and loss statements. It's a bookkeeping term, right? Your income sheets that show, here's how much I earned, here's what my expenses are, so that Social Security can take that figure and project it forward. Now, if your projections aren't accurate, if they're too high, your SSI check will be reduced too much and you're going to struggle. If your projection is too low, then you'll probably be overpaid and you'll have to have that recovered moving forward. That's simply the nature of the beast. It's something to know about the SSI program and the way it deals with self-employment. It can't be avoided, but it's something to prepare for. You have to be watching that profit. Beneficiaries should report any major changes in their profit. What does that word major mean? Well, that's a case-by-case decision. if you're watching those profits and you had estimated a profit of $200 a month, suddenly your profit is $400, $500, $600 a month, that's major, meaning it's going to cause your SSI cash payment to be reduced further. That's worth reporting. Now, if you have that kind of business where you lose money and then earn money and lose money and earn money, those are the ones that are the hardest to gauge. And some businesses are simply like that. And what you need to do is make the best guess you can in that first year of operations, keep your books meticulously, and then in that second year of operation, Social Security will use whatever the Nesi was for the prior year to then prospectively adjust your cash payment for the coming year. And again, with every year of operation, watch those books and report any major changes that would cause your SSI to be reduced. They're going to verify that Nesi every single year. You have to verify that by sending in your tax returns, and that's required. So you need to get on it as soon as your tax year is over, get together your records, have your accountant work on that, file it, and make sure that Social Security gets a copy of those returns. And in my opinion, you probably are best off taking those returns in person down to your local field office where you can meet with a claims representative, get a receipt from them to verify that you did submit your returns, and discuss how that particular Nesi figure will affect your past SSI and your SSI moving forward. You can see this is a little bit of work, and it does create some issues with managing that SSI cash payment. Worth it for those individuals who manage a successful small business, but it definitely has some very unique aspects that have to be watched. Now, on this last slide, I've provided you with links for some additional resources. I have literally given you such a surface review of how SSI looks at self-employment and the income generated from self-employment. You know about this much, okay? So probably just enough to make you a little bit dangerous, but there are lots of places for you to go. If you have this compelling need to know and you want to dig further, the first one is a lengthy paper that we use when we train benefits counselors on self-employment and Social Security disability benefits, and it explains everything you would ever want to know in detail. I'm not thinking that would be for someone who just wanted that very surface knowledge, but it is a very, very deep source of information for those of you who really want to know everything. Next down is a frequently asked questions about self-employment and benefits, and this is available on our NTDC website, and it was really written for a lay audience, so beneficiaries or professionals in the disability services world. It's easier to understand, much shorter than the first resource, and please feel free to print these things off and to share them with beneficiaries. They were written with Social Security funds. Our staff is funded by Social Security. These documents are vetted by Social Security's corporate office staff in Baltimore, so you can rest assured the information provided in these resources is correct. They are also updated every year, so any changes to the rules or the laws are reflected in the documents. So they're a tremendous resource. They are free because they are provided or developed using public funds. And you just you can share them far and wide, and we encourage you to do that. We also offer free training, not just on self-employment, but on the impact of earned income on benefits. And I've provided you with a link here. This is internet-based training. It is 6 one-hour lessons with accompanying readings and exercises, and you get a little certificate of completion when you're done. We offer it almost every month. It is free, and we don't limit registration. So if this training has sort of piqued your interest in this whole subject matter of how benefits are affected by work and earned income, please avail yourself of this training. You'll come out of this 2-week period knowing a whole lot more than you did before you went in. Now, it's not going to make you a certified CWIC, but it's going to give you a tremendous amount of information. Plus, you'll walk away with lots of written resources in your hands to refer back to if you can't remember. Tell me again how this student earned income exclusion works. This will give you access to all of that information. So don't forget, if this is something you really enjoy, then we have much more training that you can avail yourself of. And then finally, I've provided a link here to the website where you can find the designated WIPA, that stands for Work Incentives Planning and Assistance Program, that serves whatever counties you are in whatever state you're in. Remember, this is a national program fully funded by the Social Security Administration, and a certified, trained, tested CWICs staff these projects in every state and all of the U.S. territories, and are available to provide individualized benefits counseling to people who are working or are actively pursuing an employment or self-employment goal. And for any beneficiary who is planning for a self-employment goal, please refer them prior to working on getting that business set up, because there are some work incentives like PASS, right, the Plan to Achieve Self-Support, that can be used to fund or capitalize the startup phase of a business. And there are some complexities when it comes to reporting self-employment income, or Nesi, and we really would like beneficiaries to see an expert before that shingle gets hung up and they're out there selling product and services and then are unsure how to get that information to Social Security, or even what's going to happen to that critical SSI cash payment or Medicaid. So remember, get help first, and there is help available everywhere. Now, in your home state, you might have additional sources of benefits counseling, not just the WIPA, but other ways to get benefits counseling. In some states, my state of Kentucky is one of them, our vocational rehabilitation agency pays for other people beyond just WIPA to do benefits counseling, and they're available to work with people who are earlier in that process of deciding if work is even possible, whereas WIPAs tend to focus on people who are already working, are actively planning, like they're in a job search mode or business startup mode, or are actively preparing for employment. So that wraps up the content for today. I hope that you've gotten something out of this, and I hope that you will avail yourself of some of these additional resources to learn more. Thanks for joining us today.